Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a new report. The U.S. Justice Department is close to approving the Sprint T-Mobile merger despite early hurdles in the way of a deal. What are the chances the $26 million transaction goes through? Plus, tech leaders step up their lobbying as U.S. government agencies prepare for potential antitrust investigations. Who will come out on top? And IPO fever, the buying spree during Chewie.com's first day of trading, is reaching levels rarely seen since the 2008 financial crisis. First, to our top story, U.S. Justice Department is nearing approval of T-Mobile's $26 billion merger with Sprint. This, according to the New York Times. Remember, a group of states sued to block the deal on antitrust grounds, putting pressure on the Justice Department as it nears a final decision. Our Bloomberg Deals reporter, Nabila Ahmed, joins us from New York. So, Nabila, what do we know?
So, as we wrote yesterday, Emily, the DOJ has been continuing negotiations with Sprint and T-Mobile about how to approve the deal, basically. So, Sprint and T-Mobile have promised to divest a number of assets. It includes their prepaid brand Boost and some Spectrum assets already to the FCC to get the FCC's approval. They are now working with the DOJ to potentially offload some other assets. They've got a list of buyers that the DOJ would be comfortable these assets going to, that Sprint and T-Mobile are working with. So that includes Dish, Altice, and Charter. So basically, what the DOJ wants is for a fourth carrier to be a viable fourth carrier to be set up out of this deal. So even after Sprint and T-Mobile merge, which would take the number of players in the market from 4 to 3, the DOJ wants to see somebody come in and buy these assets that could provide viable competition to these guys.
So how would this fourth carrier work? And would the fourth carrier actually stand a chance?
Well, that's why Spectrum assets are now being discussed as something that these companies have to divest. Because what the DOJ wants is for them to pave the way for a competitive fourth carrier. And that's why you see someone like Dish in the mix, because they already have national infrastructure. They would be more able to build a new network, and Dish already has a lot of spectrum as well. So the DOJ is leaning towards buyers who could provide this kind of competition.
All right, Bloomberg's Nabila Ahmed with that latest update on Sprint and T-Mobile. Thank you so much. Meantime, the U.S. government is sharpening its antitrust scrutiny of big tech. In a sign that formal inquiries could be forthcoming, the Justice Department and Federal Trade Commission have divvied up antitrust oversight for Apple, Amazon, Facebook, and Google. But tech leaders are stepping up their lobbying efforts as well. Apple CEO Tim Cook visited the White House this week to discuss efforts to develop job training programs. And Google CEO Sundar Pichai touted creating jobs at an Oklahoma data center to CNN, arguing that bigger can be better. Joining us for Reaction Elevation Partners co-founder Roger McNamee, who is with us from Washington. So, Roger, you've been liaising with some of the people who are going to make decisions on these antitrust issues at these federal agencies. What's your argument to them?
So, Emily, here's the thing. The tone of the government has changed so dramatically in recent months because I think there is an awareness everywhere that especially Google and Facebook, but also Amazon and Apple, have issues that really are bad for the economy, they're bad for competitors, and they're bad for consumers. And as a consequence, you see all of the big four being investigated at the moment. But the cases are very, very different. The one against Apple, I think, is trivial because it relates to the App Store, and I think it can be resolved by them changing the way they price to the developer. The one at Amazon is more structural, but again, I think Amazon provides a really valuable service in a way that will survive antitrust investigation, even if they have to make pretty profound changes. For Google and Facebook, the game is completely different because the issues go to the heart of their business models, and there is no easy fix. That doesn't mean that the antitrust investigations will lead to actions that change their business models, but I do believe that the investigations are going to look really seriously at ways to force changes in the business model.
Now, all we know is that the DOJ and FTC have divided oversight over possible investigations. What's your sense of whether these investigations into all four of these companies will actually happen?
So, Emily, I'm obviously not in a position to know the answer to that question. I surely would love to know the answer, but I don't. Here's what I believe, that there are signals coming out of FTC relative to Facebook that are inescapable, right? We've even heard, indications that it might be a $5 billion fine, that there would be other actions resulting from the violations of the consent decree from 2011. There is more evidence, as we saw earlier this week, the Wall Street Journal reporting that there may be evidence that Mark Zuckerberg knew about the privacy violations that were taking place. And in that context, if that evidence proves to be valid, this situation, I think, has to become more extreme than even what's been discussed. I don't think a $5 billion fine is going to move the needle on Facebook. I think the market's discounted that. But I don't think we should assume that's all there is on that case. On Google, I think we're earlier in the process. I think the situation is very clear-cut in two different ways. Google's monopoly in search, in advertising, and on Android are so powerful and so obvious that it's really impossible for me to imagine that the Department of Justice won't initiate some kind of investigation, and we'll have to see where that leads. So
let's stick with Facebook. What do you think actually would move the needle? I mean, obviously, co-founder Chris Hughes, one of the earliest employees at Facebook, has argued for breaking up Facebook. Sheryl Sandberg has in part responded saying, well, China isn't going to break up its big tech companies. And to a certain extent, we heard Sundar Pichai making that same argument to CNN. Yeah. Bigger can be better and more successful.
Yeah, I think it's pretty obvious that bigger has been fantastic for shareholders. I think that in terms of broad competitiveness and especially innovation, big has been a disaster. The Silicon Valley entrepreneurial community has seen its entire world distorted. Effectively, you have to avoid, every startup has to have a plan for avoiding Google and Facebook. And it essentially has driven a ton of money into businesses that are more capital intensive, like services your parents used to provide for you, or into things that are higher risk and probably lower return, like crypto and like transportation, like scooters. So in my mind, the case here for doing the investigation is clear-cut. I think the China rationale is nonsense. Where I think that the regulation needs to go two ways. You need antitrust to improve the competitive environment. I would look to the way AT&T was handled, where the patent portfolio was put into the public domain, where they were restricted to a space smaller than they were competing in, and where their own infrastructure was used to create competitors. I think all three of those work here. I think you also have to go after the core business model. You have to go after what the Harvard scholar Shoshana Zuboff calls surveillance capitalism. This notion that these companies can either acquire or through surveillance capture a data avatar, really a data voodoo doll for each person in the population, and then use that for their own gain over the objections or without the knowledge of the consumer. I think that business model is extremely dangerous, and we're going to need a different kind of regulation there, one that's new to this kind of economy. It'll probably take a while, but that is a very important thing to do, and I think regulators are aware of that.
Regulation is one thing, a breakup is another thing. Do you believe that Facebook and Google should be broken up, and if so, how?
Well, so, Emily, I think there are lots of ways to look at this. Most of the discussion to date has been about the merger activity that shouldn't have happened, right? And therefore unwinding things like Instagram and WhatsApp at Facebook, unwinding the mapping products at Google and some of the other things that Google's acquired. I think you have to look at all the alternatives. When they broke up AT&T, they broke it up horizontally. They broke it up by region. I think you have to look at every possibility. But at the end of the day, breakup will not be helpful if you do not go after the business model. Again, what Professor Zuboff calls surveillance capitalism is itself a very severe problem for the economy and especially for consumers. It's the reason why we face threats to public health, democracy, privacy, and competition. And so you have to go after that. And in order to do that, I mean, you can't just break them up and leave them alone. You have to deal with the business model at the same time.
All right, Roger, you are sticking with us. We can't stay with you for just one block. We'll be talking more about this through the half hour coming up. Perhaps no industry has more at stake than semiconductors in the U.S.-China trade war. And we're already seeing the impact after Broadcom cut its full-year sales outlook, shares plunging. We'll discuss next. This is Bloomberg. Broadcom shares plunged at 5%, wiping out most of this year's gain after the company cut its forecast in the midst of the U.S.-China trade war. Other chip stocks went down with it. Broadcom was a major supplier to Huawei, but has since cut off that supply to comply with the Trump administration's orders. The chipmaker also provides chips to Apple, which could be under threat if President Trump decides to raise tariffs after the G20. For more on the impact of the ongoing trade war between the U.S. and China, we're joined back again, Roger McNamee, co-founder of Elevation Partners. So, Roger, nobody knows what President Trump is going to decide, but based on what we know so far, how devastating do you think this spat, this war, this dispute is going to be for U.S. companies?
I mean, Emily, the problem with this whole thing is we have no visibility. There's nothing about this trade war that makes any sense at all. We had this extraordinary and very symbiotic relationship with China that was based on a goal of giving consumers the broadest possible choices in product at the lowest possible price. And in that context, we overlooked the fact that there was a lot of industrial espionage and some clear manipulation of markets that was detrimental to some American vendors, but it worked out great for consumers. To me, it's okay to make a change in that larger context and say, okay, we're now going to optimize the needs of companies more than we are consumers. We're going to tolerate some price increases and all that. But that's not what's going on here. What we're doing here is self-inflicted. We're basically unwinding globalization. We're unwinding this really constructive symbiotic relationship without replacing it with something that we understand, know, and can plan for. And so I look at this and see nothing but downside. In my mind, I don't know what Huawei is going to do, but presumably this will engender competitors to Broadcom. And, you know, maybe it doesn't last that long, but people aren't going to look at trade with the U.S. the same way after this. They won't need to. They'll have more leverage for negotiating. And what a waste.
Right. The skeptics, though, would say the trade relationship with China has, for many, many years, been very unfair. They've been stealing intellectual property from the United States. They've been the benefactors of a massive trade deficit that the U.S. has suffered from. So,
well,
does something need to change? And could that change perhaps be better than the change that the administration is pushing now?
So let's unpack that, okay? The first part of it is demonstrably true that technology vendors in particular, have suffered a lot of industrial espionage. And some brands have suffered from counterfeiting, right? That's clearly true. And there's obviously been a prioritization of the needs of consumers. You go into a Walmart and it's 90% of the products are made in China at incredibly low prices. And so if we're going to move off of optimizing for consumers, that is totally rational. But you want to do it with a clear plan that everybody understands and that everybody agrees to, and that China understands that China agrees to. So I look on that part and say, I'm perfectly happy to have the conversation about re-optimizing for American corporations over American consumers. What I'm not prepared to do is buy into the nonsense that the trade deficit is a problem. I mean, that's what drives the incredibly low inflation we've had for so long. It's been about the fact that we have this really symbiotic relationship where we use our capital, our very high value currency, and we use our buying power to take advantage of the fact that China's invested a ton of money in infrastructure. If we want to change that, let's do it with a plan. Let's not do this with, knee-jerk activity that leaves businesses with no way to plan and consumers potentially with higher prices and no benefits.
So let's talk about Apple in particular. Of course, we know Tim Cook was meeting with the president this week. There's been this threat of tariffs looming on Apple products for many, many months now. It really hasn't hit Apple yet. That said, there certainly could be a sentiment change in China where Chinese consumers decide not to buy Apple products. Foxconn Hanhai has said that they could manufacture U.S.-bound iPhones outside of China, and you've got analysts out there saying that a potential hit has already been built into the stock, and if the trade war is resolved, then Apple could bounce back.
So, Emily, I think this is a really important set of questions, not just for Apple shareholders, but frankly for everybody in the tech sector, because Apple took a massive hit just a few months ago because the business in China for iPhones has slowed down really dramatically. And going forward, you have to believe there's no way it rebounds hard. It just, it's what it is. Smartphones are mature. They're not going to come back. Apple's best opportunity in smartphones is to convert from selling them at $1,000 a piece to having them be part of a monthly subscription where you pay $30, $50, $75 a month, get a phone with a set of services around it. They have the balance sheet to do that. I think that would allow them to gain a lot of market share. I think that's the single biggest thing for investors to look for, and I have no reason to believe it's going to happen or not happen. It's just, it could happen, and it's really a logical thing for Apple to do because it's so hard for Android to respond. Now, relative to Apple's other things going on, Apple's done a really good job of maintaining good relationships with the Chinese government and with our government. I think Apple's worked really hard not to be a source of conflict for anybody. But there's no way it can overcome the tsunami of a change in trade strategy from globalization to nationalism. And, at the moment, we're heading in that direction, and that makes me very uncomfortable.
All right, Roger McNamee, stay with us, co-founder of Elevation Partners. We're going to be talking more about Facebook, in particular, after the break. Facebook saw a pop in shares Friday on its crypto bet, but the company is still facing a losing battle to fight the spread of misinformation around the globe. This is Bloomberg. As we head into the 2020 U.S. elections, Facebook is facing fresh controversy around fueling hate speech in Myanmar. For years, Facebook largely ignored anti-Rohingya Muslim propaganda on its Myanmar pages, despite substantial evidence that it was leading to violence. The New York Times reported this week that anti-Rohingya hate speech and misinformation have now spread to India, where Facebook has 340 million users, all of this impacting recent elections. Still with us, Roger McNamee, co-founder of Elevation Partners and author of Zucked, Waking Up to the Facebook Catastrophe. Roger, this is a problem that you've been talking about for a long time, but now this latest twist that this hate of this one particular group has spread to India has impacted elections there. Some of the stories are incredibly horrifying, and yet Facebook says it has stepped up efforts to combat this particular issue. Have you seen much progress?
I mean, Emily, the really sad thing is there has been no substantive progress on any of these issues, and there's a really basic reason why. Facebook and Google are in the business of first gathering our attention and then holding our attention while they show us lots of ads. And it turns out for most human beings, the things that stimulate our engagement and keep us active and emotionally focused on content are stuff that appeals to our lizard brain, so fear and outrage. So specifically, hate speech, disinformation, and conspiracy theories are amazingly constructive for the business model of these companies. And this is why they go out of their way to say things that make it sound like they care deeply, but to move very slowly on substantive change. There is no way that you can use moderators at the scale of Facebook or Google to protect users. You have to change the way that the algorithms work. You have to recognize that it's not a free speech issue we're talking about. It's an issue of amplification of the worst voices in society. And they have the means to do this, but for business reasons, they've chosen not to do so. They keep hoping that the fear and anger that we all feel over these things will pass. And the problem is there's just too many There are just too many of these stories, and every day there's something new, and they just can't help themselves. They keep stepping in it time and again.
Meantime, this deepfake video issue seems to be getting under the skin of Congress. Nancy Pelosi hasn't returned a couple of calls from Mark Zuckerberg. Meantime, advertisers have spoofed Mark Zuckerberg in a deepfake video of him. Both of these videos, the one of Nancy Pelosi, the one of Mark Zuckerberg, Facebook has said, we're going to leave this up. We'll deprioritize it. We'll flag it. Is this a different issue than the misinformation that we're talking about?
No, it's part and parcel of the same thing, Emily. I mean, and it's completely ridiculous. Their position on this is indefensible. What we're talking about here with deep fakes is content that has literally no social purpose. Other than Princess Leia in the Star Wars movies, I don't think there's been a single constructive use of a deep fake. And what I don't understand is why Stanford University and other places continue to develop this stuff. To me, this is like human cloning. It's like really obviously a bad thing, and we should not be enabling people to develop it. We surely should not allow platforms to host it. Right now, the platforms are saying to Congress, hey, you should only regulate the people who create this stuff. That is nonsense. The platforms have to be responsible. If they do not have an incentive to get rid of the stuff, it will keep coming back. And the problem is, it's really hard, and they're going to have to put their best people on it. I view this, Emily, a little bit like chemical companies in the 50s, which were amazingly high growth, amazingly profitable, because they could pour their waste products, chromium and mercury and things like that, to pollute fresh water without any cost or consequences. And what's going on with Google and Facebook is they're creating toxic digital spills because they don't have to pay the cost of it, and it's way past time to make them pay. And yet they still do dumb stuff. Like Facebook this week introduced a product called Study, where they pay people in order to spy on them. And it's like, guys, get a grip, will you? I mean, that stuff is just totally inappropriate.
Roger, quite the metaphors there. An interesting comparison. All right, I got about a minute left, but I got to get your thoughts on Facebook potentially launching a new cryptocurrency next week. How optimistic are you about it?
What could possibly go wrong, Emily? I mean, cryptocurrencies have been fraught, right, with all kinds of issues. There have been fraud issues. There have been, coins that disappear. There have been all kinds of challenges in here. And I want to believe that the people at Facebook are smarter than the people who've done crypto elsewhere. But this company needs another regulatory morass like it needs a hole in the head. And I just think that their inability to understand that this is a time to clean their house.
Right.
It just suggests, Einstein's definition of insanity was doing the same thing over and over, expecting a different result.
Roger, we're running into a commercial break. Would love to continue this conversation, but I got to let you
Another
go. Roger
time,
McAfee,
Emily.
Elevation
Take care.
Partners, thank you so much. Reminder, we're going to be speaking with Facebook COO Sheryl Sandberg next week at the Cannes Lion Festival. Tune into Bloomberg Television for that. We will be asking her some of these tough questions. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Now, continuing our look at the U.S. government versus Huawei, the Trump administration assured Congress that federal agencies will meet a 2-year deadline to comply with a ban on deals with the Chinese telecom maker. That means the government can't enter into contracts with Huawei or buy gear from them. The bill that prohibits those deals was passed in 2018 with a 2-year time frame for implementation. And Friday, Maryland Senator Chris Van Hollen threw his support behind it on Bloomberg Television.
I support that decision because I do think this is a critical national security issue. In all my conversations with the intelligence community, they've made clear that if Huawei is allowed to dominate the 5G infrastructure of the future around the world, that will compromise our national security interests and those of our allies.
Our next guest is no stranger to international disputes and trying to resolve them. Anya Manuel is a co-founder and principal at the strategic consulting firm Rice, Hadley & Gates. She is also a lecturer at Stanford University, and prior to that, she served in the U.S. State Department. Anya, thank you so much for joining us.
Happy to be here.
So, is the U.S. taking the right stance on Huawei?
I think two things. Huawei is a problem in 5G, and we're overreaching. So, on the 5G networks, as you know better than anyone, it's going to run all of our communications going forward and the Internet of Things. And you don't want any one company, Chinese or not, with the ability to mess with our electricity grid or tell all the self-driving cars to veer off the road. So that part is the right thing to do. But this executive order that's just come out that says, for example, Google can't put Android on Huawei phones, I think is overreaching. I haven't heard any security experts say that Huawei phones are a problem in any way.
Well, you know, the U.S. government seems to be concerned about national security, concerned about espionage. I spoke to a U.S. government official last week who actually has oversight into the U.S. position on Huawei, and he never admitted, though I did ask several times quite explicitly, if there was evidence of espionage, but he continued to say that Huawei is perfectly capable of espionage and interfering with U.S. national security if left to its own devices. And so let's say we don't have evidence of espionage. Given that Huawei is capable of this, potentially, is it the right tact?
Well, this is the difficulty on 5G. It's like saying someone has a gun, but they haven't shot it yet. So the capability that any one company that creates all the 5G networks around the world will have to spy is enormous, and Huawei has been caught spying before, so I think we're right to be worried about that aspect of it.
Meantime, earlier on Bloomberg Television, we spoke with Senator Rick Scott of Florida, talking about the U.S.-China trade war. He took quite an extreme position. Take a listen to what he had to say.
I don't think any American should buy one Chinese product. We should not do any business with China. We should not buy anything from China. We have to understand they are our arch enemy.
Which basically means no American should buy 90% of anything that's in Walmart.
Yes. I worry about that, and I disagree 100% with that position. Our best case scenario would be where we compete with China, but we realize that they're going to be a competitor in lots of different areas, but we don't build a wall. We can't shut them out entirely. It's our fastest growing export market. As you mentioned, Walmart, Boeing sells a quarter of its planes to China. If that market is closed to us, hundreds of thousands of Americans are going to lose their jobs. So the idea that we're going to completely decouple these two economies, to me, makes no sense.
Well, someone would argue that China has already cut off many U.S. companies from operating in China, shut down Facebook, shut down Twitter, Google has left the country. So what substance is there to this argument that we're already in the middle of a tech Cold War with China?
The technology competition is real, and I think we're waking up to it a little bit late. You know, Chinese have been stealing our trade secrets. They're encouraging some students at U.S. universities to spy. They're handing over intellectual property the price of doing business in China. So all of those things are problematic and need to be stopped. Completely stopping doing any business with China, like we're starting to do, isn't the answer. The answer is we got to compete. We need to support our own R&D. We need to get better at STEM research. We need to create a fair playing field for tech. You mentioned it. They're not letting our companies in, so we should be doing that. But instead of picking trade fights with every other ally, we should be working with them to work against China's most mercantilist impulses. I don't see much evidence of that.
What would some concrete steps be then in your plan, working with other allies to work against China?
So I listed some of them. For starters, we should have joined the Trans-Pacific Partnership, which both the Bush administration and the Obama administration supported and negotiated. The Trump administration pulled out of it. Really importantly, we should take the lead in setting the global values for technology. We're nowhere on this. You know, after World War II, we created the IAEA on nuclear power. We created the World Health Organization. We need to be doing the same thing on ethics and AI, bioethics, all of those things where China is neck and neck with us, and they're setting the standards and we're not. That's not a good
Meantime, the cover
to be in.
story of this week's issue of Bloomberg Business Week has to do with Chinese cancer researchers in the United States. And the United States, it appears, has pushed some of these researchers out of their positions. Some of them have actually gone back to China. Is that too extreme?
Yeah, this is a perfect example of the overreach and where this is difficult to get right. So it is 100% clear that the Chinese Communist Party is encouraging some Chinese students and researchers in the U.S. and elsewhere to spy. It's clear. Does that mean all of them are spies? Absolutely not. And in my view, the answer isn't xenophobia, which we're leaning towards. You know, your story says, I think something like the FBI is prosecuting all of these Chinese American scientists, and they're finding that many of them are completely patriotic Americans and haven't done anything wrong. So we do need to crack down hard on people who are a problem, but keeping Chinese students out of our universities and telling all the researchers to go home isn't the right way to go about it.
Do you have concerns this could spread to other countries? For example, India is considering raising tariffs on U.S. imports.
The India situation on trade is a little bit different. So India, we've just canceled the GSP, the system of preferences, which allows them to bring things in at preferential rates because they're still considered a developing country. India is pretty protectionist, but this is part of what we were talking about a minute ago. We in the U.S. seem to be picking fights with everyone, including our allies, when actually we should be working with India and Japan and Israel and Europe to say, hey, China, here's where you're overreaching and being too mercantilist, and we're going to check you as a group, but we're all going to work together.
All right, Anya Manuel of Rice Hadley Gates, you also gave a TEDx talk that's worth watching about the U.S.-China tech Cold War. Thank you so much.
Thank you
for stopping by. Thanks. Coming up, analysts are split on Twitter's growth outlook. Is it time to sell? Do investors see a new buying opportunity? We will talk about the future of the social media company next. This is Bloomberg. Wall Street appears to be at odds over Twitter. Shares of the social media company tumbled Thursday after MoffettNathanson slashed its price target to $25, the lowest on the street. In an interview with Bloomberg, analyst Michael Nathanson warned of weak third quarter results.
The stock's valuation is literally crazy. It's double the valuation of Google and Facebook. It grows in line. I just don't think it makes any sense. So second half of this year, we're expecting deceleration on top line, margin pressure, and that's our call.
Today, however, Twitter's biggest bull, Loop Capital analyst Alan Gould, affirmed its buy rating, adding investors should use the company's recent weakness as a buying opportunity. Joining us to discuss, Bloomberg's Kurt Wagner and Jitendra Warwal. So, Kurt, what's going on with these differing analyst calls in the midst of, big trust, antitrust,
right,
big tech antitrust scrutiny, a trade war, and all that?
Super clear, right? You buy or you sell. It's perfect. I'm actually kind of surprised just because Twitter has been probably the quietest of all these big tech companies. We're talking about Facebook, we're talking about Google and Alphabet. We don't talk much about Twitter, so it's anymore. And so it's interesting that this is coming up. I mean, in terms of regulation, they certainly have not been part of that same conversation that Facebook and others have. So maybe there's some, relief there that they're not involved in all of that.
Jitendra, what are the financials that could be driving such differing calls?
So this is a problem of visibility and long-term growth with this company. Now they are showing some good signs with user engagement, the investments that they're doing in fixing the trust issues and the health issues, the initiatives that Twitter is chasing is showing some early signs of success here, but will it last is the question mark. So that's why you're seeing this dichotomy. And at the same time, if you look at the valuation, when you compare it to Google or Facebook, both of them are growing faster. They have better margins, and Twitter is trading higher than them. So that's why you see the question marks over here in terms of longevity of growth. So if they are able to show consistency going forward, that's when there'll be more confidence in the growth story here.
Kurt, what is the biggest obstacle to Twitter growth? Is it the health of the platform? Is it misinformation? And I mean, we know they've been continuing to take down accounts tied to foreign actors.
Well, at this point, I mean, Twitter's not new, right? Twitter's been around, I think, 13 years. So it's not as if people who don't know what Twitter is. I think the thing that Twitter has always struggled with is just simply creating something that's easy to use and convincing people that, hey, this is worth downloading, this is worth your time. I mean, so much of Twitter is public, so many tweets. Anytime the president tweets, you can see those on television, you can see it in the news. There's not a huge motivation, I think, for a lot of people to go out and actually download the app. And so I continue to think that Twitter's biggest challenge is just simply convincing people that being on Twitter is necessary, and that's the same thing they've been dealing with for years.
Twitter's last CEO, Dick Costolo, before Jack Dorsey came back, actually tried to push this idea of logged out users who see tweets but maybe don't log into the platform, and that didn't necessarily come off so well, Jitendra? I mean, if organic user growth isn't really happening, is it just about
So
revenue?
right now what they're doing is, and like Kurt said, they're actually buying themselves time to grow the overall base of users by just focusing on the daily active users. So whatever growth that they're pushing right now, it's getting more of the users that are already logged in. After you've seen results from that, and after the prototype app make some progress, and you see more conversations happening organically from community beyond the core users, then you can focus on the larger group. But like for now, they're just focusing on the daily active users and buying themselves time really to fix the bigger problem, like Kurt, you mentioned.
So Kurt, who are Twitter's biggest competitors today? I mean, there were concerns about Snap. Snap has run into the same problems. There were concerns about Facebook, the blue app proper.
Right.
That doesn't seem to be as much of a threat.
Yeah.
Is it Instagram? Is it the pushback against social media in general?
I mean, it's interesting because the news industry is kind of both a competitor and obviously a huge benefactor. I mean, I'm on Twitter all day long and I'm contributing at the same time. If I can get information in other places, I think that is maybe their biggest threat. Is Twitter is ultimately, if you boil it down, a place for news, a place to figure out what is happening right now. And I think it does it better than most. But if you're going and getting that news in other places, I think that's a threat. Facebook used to certainly be. I just think Facebook is used in such a different way now than Twitter really is, that I really think they're almost competing with the people who also make it a really valuable platform.
All right, well, we'll be watching to see who's right, the Bears or the Bulls. Jitendra Wawal, Kurt Wagner for Bloomberg. Thank you both. All right, online pet supply retailer Chewie soared nearly 60% in its trading debut Friday after raising over $1 billion in its IPO. The PetSmart-owned company saw shares rise as much as 88% in the first hour of trading after an opening price, $36 a piece. The offering was the 6th largest in the U.S. this year and one of only 10 IPOs for online retailers to surpass that $1 billion mark. Bloomberg's Emma Chandra spoke with Chewie CEO Sumit Singh about going public. Take a listen.
We have a very diligent cash flow management process and approach, and we'll use it to invest in process technology infrastructure, that kind of stuff.
You also have a partner that's PetSmart. What proportion of that, of those proceeds are going to go to service their debt?
A portion of that 90% could go towards servicing that debt, yes.
You can't tell us how much that would be?
No, I'm not aware of it.
So you're going to focus on technology. One of the things that Chewie has been able to do is capture a big proportion of the online pet supply market. But Amazon has a bigger proportion, and we're seeing other retailers, the likes of Walmart, of Target, really pushing into this area too. How do you plan to maintain that market share and indeed grow it?
Okay, Matt, there's a lot more growth in front of us. We are today, if you look at the number of households in the US, we're about roughly 10% penetrated. And then number two, we've shown a unique ability to grow share of wallet. And then three, we have strategic verticals such as private brands. And recently we started, offering prescription medication to our customers, where we want, our healthcare focus, where we want to keep the veterinarian in the center of the equation and really develop that compelling value proposition. There's so many of these levers that we yet had to fire and that we're firing on constantly. There's a lot more in front of us.
So you plan to add services, and that's a big growth area for you?
Our mission statement is to become a convenient and trusted destination for pet parents everywhere. And as part of that destination, as part of that creating that one-stop pet shop, sure, we'll remain open-minded and thinking about services type of a marketplace as well.
So there's a lot of opportunity there. In the last year or so, you've seen enormous sales growth. They grew by more than $1 billion last year. How do you intend to grow that? How do you intend to keep up that pace? Investors will be looking for that.
There, again, $70 billion market, expected to grow at 4 to 5% CAGR. On top of that, there's not only a secular shift from online, we're stepping right into that mix and creating that shift. Our active customers spend more and more the longer they stay with us. Our private brands are getting healthier. Our healthcare offerings are still mature. We have a lot more to do out there, a lot more customers to add, and really continue the value proposition that we've been on.
Now, a big proportion of your sales is through auto ship or customer renewal, automatic renewal. What proportion do you see that growing to?
We've grown that. We've continued to grow that, first of all. It provides us a predictable recurring revenue stream, as you've mentioned, and it's grown from low 60s in the 2016 timeframe to exiting 2018 and 67. We'll continue to add assortment, continue to help our customers build baskets, continue to look at adjacencies that come from these newer verticals that we're launching, and that's how that number stays healthy.
Now, a lot of this is also about service, but a number of companies are now moving to improve their service. For how long can service be a differentiating factor?
Chewie, if you think about this category, pets is the only category where a customer refers to themselves as a pet parent. Service is fundamentally important to it, and we have it because we want it, not because we need it. We constantly invest in our customer service, building experiences, training, learning and development. And by the way, our customer service is scaling below our revenue is. So it's a phenomenal proposition for investors as well as customers and the company. We'll keep doing more of that.
That was Chewie CEO Sumit Singh. Meantime, the founder of Zoom Video has jumped into the ranks of the world's richest people since his company went public in April. Shares of Zoom have soared 180%. That surge means CEO Eric Yuan joins the 500-member Bloomberg Billionaires Index with a net worth of about $5.3 billion. Still ahead, DJI, the world's largest drone maker, has come down to earth. Why the company is rolling out a new robotic tank marketed to young students. This is Bloomberg. Story we've been following. Employees at Vox Media will get minimum salary guarantees and 4 months of paid parental leave as part of their first union contract. The online publisher's 350-member editorial staff ratified its first collective bargaining agreement a week after the employees held a one-day walkout to pressure management. The pact caps an effort that went public almost 2 years ago when employees at Fox websites announced an organizing campaign. Well, DJI's RoboMaster S1 is the drone maker's first ever ground-based robot. It is a toaster-sized device that people can build at home and turn into a battle bot, complete with lasers, bullets, and loads of AI software. Hello World's Ashley Vance and his two young sons got the exclusive first look at the new product.
This thing right here might as well be the Loch Ness Monster with an iPhone 11, or footage of an alien drinking a milkshake in Area 51. It's a highly guarded secret, and anyone who knows about it or has seen it has been forbidden from admitting that it exists for months. That is, of course, until it made its way here to my kitchen counter, and now to you. Say hello to DJI's latest creation, the RoboMaster S1. You all know DJI. It's the world's largest drone maker, and perhaps China's most popular tech company. People obsess over its products with an Apple fanboy-like lust. And DJI delivers, bringing out one new drone after another. But now DJI has decided to bring its talents to the ground. With the RoboMaster S1, it has built a robot aimed at consumers who want to drive around really fast and then shoot each other with pellets and lasers. Because if there's one thing the world really needed, it's the violence of video games brought to real life. The idea for this new robot started here. It's the annual RoboMasters competition that DJI holds in Shenzhen. College engineering students show up for a couple of weeks and try to destroy each other with a variety of robots. As you can see, it's a lot of fun. The big idea then was to shrink these robots down to little ones that regular people could build and then use in their own battle. This fella here is the lead of the design team who helped bring this device to life.
Can you walk me through some of the different parts?
So this is a video transmitter, and here is a camera, and also the shooter mechanism.
Then you've got the bullets in there?
Yeah, 90% of them are made of water. And when it hits things, it smashes and it disappears. Then on each robot, the lights here indicates the hit point. When you repeat it being hit, the robot will end up being destroyed.
That's the object of the game, is to chase each other around and hit these plates. Is there like a laser?
Yeah, and if you always aim at the center, you should be fine.
Because DJI's founder, Frank Wang, is a cruel, cruel engineer, you cannot just buy a RoboMaster S1 and play with it. No, you must first assemble it by hand and learn things along the way about robotics and coding. Here's a group of youngsters DJI turned into its product testing guinea pigs at something it billed as a summer camp.
This robot is also an educational tool to teach programming language. For example, it can be used as an autonomous driving car, but we don't have built-in functionality for this. Kids have to learn how to program themselves to achieve these functionalities.
The hope is that this will teach kids a few things, get them hooked on robotics, and turn into a worldwide sporting phenomenon of sorts.
We hope that in the future, robotics will become a major sport, like football, basketball. That's our vision for this product.
I'm coming for you!
Oh, you can't get me! Oh.
Ashley Vance there. That does it for this edition of Bloomberg Technology. Have a wonderful weekend, everyone. We'll see you back here on Monday.